Hello there, everyone. Now, in recent weeks, I've talked a bunch about uranium, different uranium stocks, diversification, and all that. So today, I'm going to take a look at URA, the uranium ETF, and get into what's good, what's not good, and what's bad. So here we go. Please give this a quick read and remember to always question if anyone, especially some random person on YouTube, knows what they're talking about. So before we get into my thoughts about the general structure of the ETF, I think it's helpful to look at the largest holdings that it has. Now, it has 21.4% as of when I looked at it, Cameco, which is about what the industry looks like. I mean, in fairness, it's not very diversified, but that's fine, let's say. Then 8% next gen, again, okay. Then 6.6% of it is Uranium Participation Corp, which is physical uranium, which is not an equity, but again, okay. Unfortunately, that's just about as good as it gets. Now, why is that? Well, because maybe 7 of the next 11 or 12 names in the ETF are engineering, nuclear engineering plays, and they account for about 4% each. And that's not all the engineering, but just those 7 already accounts for as much as Cameco plus Uranium Participation Corp. And that's not really what I'm looking for. But the questions don't end there. Because when you look at the 9th, 11th, 13th, and 15th biggest holding of this ETF, they are, yes, miners, but miners that are not primary uranium miners. Many of these miners, which together account for, I don't know, 15%, there may be another one in there approximately, um, uranium is not relevant to their bottom line. So in addition to the engineering, you now have a bunch of major miners that focus on gold or copper or other metals that are not uranium. Now, how did this happen? Well, URA was the only uranium-focused ETF, but it wasn't the only nuclear-focused ETF. And unfortunately, how these things generally happen is ETFs are created when the sector is hot. And when a mining sector is hot, it's probably not the time to buy. So what happened when the uranium sector was created, was hot, or was the ETF was created, not the sector, and then it just got demolished for years and years and years. And then the URA, people managing the URA ETF were like, this is just terrible. Our benchmark, or kind of benchmark, the other ETF, is just beating us all over the place. So they decided at approximately the worst time to sell out of some of the uranium and enter into some nuclear builders. So to summarize the basic holdings of this ETF, 44% of it is uranium equities, which is what I'm looking for, or I would be looking for. But 21.4%, so almost half of the uranium equities, is Cameco. Now, it also does have 6.6% physical uranium, which is again fine slash good, but that means it has about 48%, almost 49%, what I'm like not what I'm looking for. The one positive thing I suppose I can say is I know some brokers will offer no fees if you buy ETFs. And so I suppose that if you're buying a small amount of uranium and you don't want to pay fees as they would cause uh, a drastic increase in your cost basis, I suppose this name is diversified-ish, and it could potentially be a way of saving you some transaction fees. But that's about the only positive thing I could say, aside from the other stocks in this. That doesn't mean they're bad stocks. It's just not super relevant to the uranium bull thesis. So that's it on this topic. And I again would like to thank you for watching and ask you, what do you like about the URA ETF? What do you wish it did better? Do you like ETFs in general? Or do you prefer investing in single names? And as always, why? I'd like to know why. So until next time, have a great day, everyone.